Hey everyone, as you might already know, Warren Buffett is arguably the best investor of all time. When Warren Buffett invests in a stock, it says something about the company. It has sort of his stamp of approval. And for that reason, many investors follow what Warren Buffett buys. And so in this video, I'm going to highlight one Warren Buffett stock that's down 87% off its high that I think you might regret not buying on this dip. So let's get started looking at this company's revenue and then profit margin and finally valuation, and then I'll let you know what this company is. So let's get right into it with the revenue. This company over the trailing 12 months has increased its revenue to nearly 2 billion at 1.987 billion, and it's done a good job growing its revenue over the years. Now recently investors were a bit upset about this company's revenue growth forecasts, right? This company grew revenue at 28% in the most recent quarter, but it told investors that growth rate is going to slow down to 23% in the next quarter. So investors were a little bit upset about the slowing revenue growth. However, that revenue growth slowdown is for a good reason. The company is purposefully focusing on more profitable customers and telling investors it's not going to spend as much effort and energy trying to acquire customers that are not providing as much value. And so purposefully it's chosen a more profitable growth outlook. Now that the cost of capital is increasing, I think that's a prudent investment strategy. Speaking of the company's profit margin, it's holding up very nicely in the most recent trailing 12 months, an operating profit margin of 45.56%, and that's been on the rise following the dip it experienced in late 2021, early 2022. And given these moves focusing on more profitable customers, I wouldn't be surprised if this company's operating profit margin continues to move higher from here, perhaps reaching its previous peaks of over 50% operating profit margin, which would put this company among the leaderboards of the highest operating profit margin companies in the world. Finally, the stock is not expensive. It's trading at a forward price to earnings of 12.6. Given its excellent growth and profit profile, it's surprising to me that this stock is trading at this cheap of a valuation. Now, it could partly be because it's a international stock. It's primarily based in Latin America, and so some geographical risk does bring down the valuation somewhat, but in my opinion, that's too much. So what is this stock? The stock is StoneCo. StoneCo is the Warren Buffett stock that's down 87% that I think you might regret if you don't buy it on this dip here. Alright, but that's all I've got for this video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.